We had some big news for Target stock investors as the company announced huge cost-cutting efforts that will impact close to 2,000 workers. I'm going to share with you the details of that announcement and update my buy or sell recommendation for Target stock in this video.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Target is eliminating 1,800 roles as the company works through an ongoing sales decline, with incoming CEO Michael Fidelki set to take the helm next February. In a memo to employees, on Thursday, Fidelki, who has been with the company since 2003, said the retailer will eliminate 8% of its corporate roles in the U.S., including 1,000 existing roles and closing roughly 800 open roles as the company was looking to hire. The layoffs are not set to impact logistics or in-store employees. In fact, these roles are concentrated in leadership positions. So it looks like the company's consolidating leadership roles, eliminating some layers of bureaucracy, which usually works out to positive benefits as they lower redundancies in the management ranks. Now, Target has been struggling year to date here in 2025. The company is negatively impacted from tariffs more so than any other retailer. The company's share price is down over 30% year to date. The reason Target is more negatively impacted than other companies is because the company is concentrated in the United States. It has roughly 2,000 locations in the United States, and it outsources nearly all of that supply outside of the United States. So nearly everything that's sold is it's sourced from outside of the United States and highly concentrated from China, where that country faces the biggest tariffs from importers. So Target, unlike companies like Walmart or Amazon, which can take the manufacturing and the supply they source from outside the United States, and they could send it to their international locations and international business segments. So they don't have to bring all of their outside supply into the United States. They can send it elsewhere, and then they can use what percentage of sourcing they have inside the United States and expand that incrementally as much as they can, and in that way help offset some of the negative impacts from tariffs. Target doesn't have that international sales structure, so there is nowhere for Target to send that inventory it's producing outside the United States. So competitively speaking, it's in the worst position of all these retailers because it doesn't have that international presence, while it does have a significant international manufacturing and supply chain. So for that reason, Target stock has been struggling, and so I'm not surprised of the layoffs. Now, that being said, I felt for the past month or so that Target stock has been undervalued. I last updated my recommendation for Target stock about a month ago, and today the share price still looks hugely undervalued considering the relatively, I don't want to say safe, but relatively safer business model of Target. The current market price is at $94.62. The intrinsic value I calculated and I updated today is $120. So you're getting a 25% undervaluation here for Target stock, which doesn't usually trade at this kind of undervaluation or even overvaluation. Target stock is not like some of those high-flying tech stocks where the price is volatile frequently. This unprecedented circumstance here in 2025 is related to tariffs and the risks related to tariffs. Now, speaking about the company specifically, Target's been one of the best, if not the best, at the same-day services where you can buy online and go to a Target parking lot and they'll deliver your items to your car. They were one of the fastest and one of the best at employing that technology and that service, and consumers have loved that service from every single company that provides it. I'm hearing that consumers absolutely love that service, and Target was one of the first to deploy that, and they're reaping the benefits of that. So looking ahead, Where do I think Target stock goes? Is it a buy, hold, or sell? I updated my buy recommendation here for Target, noting that the stock right now is the riskiest that arguably it's been since the initial stages of the COVID pandemic. So this is a moment in time where it's very risky to be a Target stock investor, which is not usually the case. This is usually a relatively low risk business. But right now, because of the tariffs and the increasing geopolitical tension, it's a higher than usual risk, but I think the risk is worth the reward at current market prices. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.